Hi, let's talk about why budgeting is so important. Estimating and matching expenses to revenue is important because it helps small business owners to determine whether they have enough money to fund operations, expand the business, and generate income for themselves. Without a budget or a plan, a business runs the risk of spending more money than it is taking in, or conversely, not spending enough money to grow the business and compete. Here are some budgeting techniques that might help you. Every business owner tends to have a slightly different process, situation, or way of budgeting. However, there are some parameters found in nearly every budget that you can easily employ. For example, many business owners must make rent or mortgage payment. They also have utility bills, payroll expenses, cost of goods sold expenses, interest, and tax payments. The point is that every business owner should consider these items and any other cost specifically associated with his or her business when setting up shop or when taking over an existing business. Another question is what to do with your revenue. With the business that is already up and running, you can make assumptions of future revenue based on recent trends in the business. If the business is a startup, you'll have to make assumptions based on your geographic area, hours of operation, and by researching other local businesses. Small business owners can often get a sense of what to expect by visiting other local businesses that are for sale and asking questions about weekly revenue and traffic patterns. After you research this information, you should then match the business's revenue with expenses. The goal is to figure out what an average weekly expense for overhead, utilities, labor, raw materials, etc. would look like. Based on this information, business owners may then be able to estimate or forecast whether they'll have enough extra money to expand their business or to tuck away some money into savings. On the flip side, owners may realize that in order to have 3 employees instead of 2, the business will have to generate more in revenue each week. Next, let's look at 6 tips that will help you plan your small business budgets. Tip number 1, check your industry standards. Not all businesses are alike, but there are similarities. Therefore, do some homework and peruse the local library for information about the industry. Speak with local business owners and check the IRS website to get an idea of what percentage of the revenue coming in will likely be allocated toward cost groupings. Small businesses can be extremely volatile as they can be more susceptible to industry downturns than larger, more diversified competitors. So you only need to look for an average here, not specifics. Tip number 2, make a spreadsheet. Prior to buying or opening a business, construct a spreadsheet to estimate what total dollar amount and percentage of your revenue will need to be allocated toward raw materials and other costs. It's a good idea to contact any suppliers you like to work with before you continue on. Do the same thing for rent, taxes, insurance, etc. Tip number 3, factor in some slack. Remember that although you may estimate that the business will generate a certain rate of revenue growth going forward, or that certain expenses will be fixed or can be controlled, these are estimates and not set in stone. Because of this, it's wise to factor in some slack and make sure that you have more than enough money socked away or coming in before expanding the business or taking on new employees. Tip number 4, look to cut costs. If times are tight and money must be found somewhere in order to pay a crucial bill, advertise, or otherwise capitalize on an opportunity, consider cost cutting. Specifically, take a look at items that can be controlled to a large degree. Another tip is to wait to make purchases until the start of a new billing cycle, or to take full advantage of payment terms offered by suppliers and any creditors. Some thoughtful maneuvering here could provide the business owner with much needed breathing and expansion room. Tip number 5, review your business periodically. While many firms draft a budget yearly, a small business owner should do so more often. In fact, many business owners find themselves planning just a month or two ahead because business can be quite volatile and unexpected expenses can throw off revenue assumptions. Tip number 6, shop around for services and suppliers. Don't be afraid to shop around for new suppliers or to save money on other services being performed for your business. This can and should be done at various stages, including when purchasing or starting up a business, when setting annual or monthly budgets, and during periodic business reviews. The bottom line is this: budgeting is an easy but essential process that business owners use to forecast and then match current and future revenue to expenses. The goal is to make sure that enough money is available to keep the business up and running, to grow the business, to compete, and to ensure a solid emergency fund.